This episode of the What the FinTech podcast is sponsored by Swift. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Nick Kerigan, Managing Director and Head of Innovation at Swift. Nick, welcome to the show.
Great to be with you, Paul.
Excellent. It's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself and your role at Swift?
Yeah, sure. I do what it says on the tin. So I head up the innovation team at Swift. It's a global role. And across that role, I really have a few aspects to it. I mean, the first aspect is our innovation strategy, which is basically a way of saying, is Swift innovating? And we believe we are. The second is that I oversee the sprints and experiments that we do when we seek to take advantage of a new opportunity or address a challenge that the Swift community is seeing. And then the third part of my role, and really probably most relevant for this conversation today, is I oversee Swift's response to what we call new frontier trends, of which digital assets and digital currencies are really top of mind at the moment. And before coming to Swift 5 years ago, I had a varied career across payments and banking over 20 years. I actually got introduced on another podcast a while ago as a payments veteran, and I didn't think I was quite so old. But it's a pleasure to be part of this industry, and I'm passionate about the payments and its role and the future.
Excellent. Sounds great. And again, it's great to have you here, Nick, and thanks so much for taking the time out to speak with us today. So on the show this week, we'll be discussing the topic of digital assets and how the evolution of the payments landscape driven by innovations such as tokenisation and stablecoins could help enable global payments interoperability. We'll explore the latest developments around the use of digital assets in the payment space, the biggest challenges facing the industry as we move towards a more tokenised future, and how Swift is helping to solve the interoperability challenge with a deeper dive into the company's live digital asset trials launched this year. So, Nick, then to start off, I mean, it seems like digital assets are on the rise globally. I mean, how has the market evolved in recent times, and how is the industry's attitude towards digital assets changing?
Yes, I mean, when we think about digital assets, this has been a journey that we've been on for some time, for several years now. And we've seen the emergence of blockchain technology then driving the opportunities to create digital assets through the power of tokens. And obviously that all started with the crypto, with Bitcoin, for example, as the first kind of incarnation of that. But in recent times, we've also seen the emergence of more institutional digital assets, and really thinking about the ability to create tokens out of potentially almost anything. That opportunity has then kind of really opened up as people have started to look deeper into this subject and think about, well, can we create token representations of existing securities? And then can we also have the ability to create tokens of things that are not easily tradable today, the so-called tokenization of real-world assets? Personally, I'm not a great fan of that term, but I get the point that there could be a real upside opportunity for making things tradable, which aren't easily tradable today. So as we then zoom forward into where this year in 2025, we've really seen this activity accelerate, and promotion of digital assets as a way forward for the securities market has really come to the fore. We're seeing some quite significant estimates in terms of how much volume will be tokenized. Estimates vary from something like $2 trillion by 2030 all the way up to 9 trillion or even 30 trillion in 10 years. So neither of us on this podcast have a crystal ball to predict the future, but certainly we can say that the prospect is for trillions of dollars to be tokenized. And then the other side of that is that we also start to see real issuances happening. So KfW, for example, has issued now something like 17 billion euros of digital bonds. The EIB recently did its fifth issuance of a digital bond of 100 million euros. So alongside the big predictions, we're also starting to see real issuance happening, and that coming into the institutional space and wholesale space, which is really where Swift operates.
Excellent. Sounds good. I mean, building on that, I mentioned in the introduction, but stablecoins in particular have been gaining a lot of attention recently. I mean, what potential use cases and recent developments are you excited about there?
Yes, I mean, stablecoins have really come into the limelight this year, partly driven by the executive order in the United States and also other developments as well. I guess when you think about digital assets, the issuance of digital assets is great, is a first step. But then for them to be meaningful for the financial markets, they also need to be tradable. And that means you need to then have not only the asset, but you need to have the cash leg as well. You need to have something to be able to pay with. And so this is where this kind of concept of cash on chain, as it's called, has come from, thinking about what digital money can be used. And stablecoins are one option in that space. Stablecoins, as you and the audience will be very familiar with, are principally, at least for the asset-backed stablecoins, kind of one-to-one with reserves, and they can be issued by various different types of issuers. And we're starting now to see stablecoins become regulated. And I think that's one key step that can potentially unlock the wider use of stablecoins. So regulatory regimes in Japan, recently in Europe with MiCA, for example, and potentially also coming in the US with Congress looking at different forms of legislation for stablecoins. So as stablecoins get regulated, it's possible that the industry will start to use them more broadly. Current use cases you asked about, currently stablecoins are mostly used as a stable value anchor in the crypto kind of ecosystem, and also increasingly for access to dollars, in particular in jurisdictions where getting access to dollars can be difficult. But there may also be other use cases that people are exploring. So possibly in B2B, possibly as that cash leg for digital asset transactions. Those could be some places in which use cases kind of for stable coins expand. At Swift, we're kind of neutral towards which type of digital money we see, whether it's stable coins, whether it's tokenized deposits, whether it's central bank digital currencies. For us, what's important is that form of money solidly and appropriately regulated, and is there demand from the financial community to make use of that form of digital money?
Excellent. I guess looking forward there, I mean, how do you see these trends shaping the global payments landscape as we move forward?
I mean, undoubtedly, stable coins, digital assets are all part of this kind of bigger trend of technology and technology driving digitization, not only of payments or finance, but frankly, our kind of entire lives, really. Everything in our lives is becoming digital. And that accelerated technological innovation is then changing expectations that we have around the experience of payments, for example, whether we're consumers or businesses, corporates, financial institutions. It doesn't really matter. It's really about the increased expectations that we have for an experience that's faster, that's at appropriate cost, and that's more transparent. I guess what I would say, though, is that I think with all of this excitement around new technology and digital assets and digital money, some of the things that we expect today, they don't just go away as a result. So when we make a payment, for example, we expect it to arrive in a relatively predictable time frame. And that isn't going to change just because we've got some new token. So I think we have to keep remembering, as we get all excited about innovation, we're remembering the expectations that we have around payments. They're there for a reason. And so for an organization like Swift that runs a very highly resilient, secure, scaled kind of network, we have to keep performing at those expectations. So we today run at what we call 4 nines of availability, so 99.99% availability. And that is something that our customers, our community expect of us and will continue into the future.
Excellent. What would you say are the biggest challenges facing the industry then as we move towards a more tokenized future?
Well, I think there's undoubtedly real excitement about the potential of this tokenized future. I've kind of said that we're in the digital asset space, we're kind of, to use a metaphor, ready for takeoff, which is another way of saying that in innovation, you classically see a sort of what we might call an S-curve of adoption. So slow start, then steepens as it becomes change that is being adopted and then gradually flattens off. And many years ago, I was part of the rollout of contactless in the UK. And that's exactly the kind of curve that we saw happening. And that change took 10 years. I think will be faster in digital assets. But with all of these types of innovation, what you tend to see is fragmentation before you get consolidation. So at the moment in the tokenized or digital asset space, we're seeing many types of digital asset being created for many different types of use case, all based often on different standards and different technologies. And I think that is probably one of the biggest challenges here, because in that fragmented space, it's really hard to get scale. And you risk the ability to grow the market because of that fragmentation. And so that's where we start to get into this space of interoperability and thinking about, as we do a lot, is really how do we link up all of these different digital assets and their platforms with each other? And how do we also then link them up with the existing payments and security systems, which are likely to persist for many years to come?
Excellent. Yeah, well, it'd be great to dive into that a bit more now then. I mean, how is Swift helping to solve that interoperability challenge?
Well, this is the challenge that we've kind of taken on for the Swift community. The Swift community is a large one. It's 11,500 banks and corporates across the globe working on both payments and securities and also trade. We started this journey several years back with pieces of thought leadership, which then led us into experimentation. And we did experimentation across digital assets, experimentation across digital money, and then some more fundamental technological experimentation around how to connect up and interoperate blockchains. Last year, we ran one of the biggest global collaborations to date in this space, where we brought together 38 financial institutions from across the world. So 11 central banks, 25 commercial banks, 2 market infrastructures. And we looked at some more complex use cases, commercially relevant use cases that those participants wanted to solve for. And we brought to bear on that an experimental interoperability solution to see if we could tackle those use cases together. And that was called our CBDC Sandbox Phase 2 project. And we got really good learnings, really good feedback out of that. And then as a result of that, and also with the support of a number of those participants, we then looked to say, how can we move then out of experimentation and POC mode into live movements of money, live movements of digital assets? And so we worked very hard together across Swift, innovation, strategy, and product teams to start to create a solution that could be suitable for live movements. And so that's the digital assets interoperability solution, which we now have in live trials.
The Banking Tech Awards 2025 are now officially open for nominations. Whether you're a bank, a fintech, a tech provider, or a rising star, this is your chance to showcase your innovation and excellence to the industry. Don't miss out on our early bird discount, available until the 6th of June. Head over to the Banking Tech Awards website today and you'll find all the information you need to enter. Final nominations close on the 11th of July, so get set up now and make sure your hard work gets the spotlight it deserves. Visit bankingtechawards.com and get started now.
And what would the best strategies for banks and other financial institutions be then to implement advancements in payments such as tokenization of digital assets into their operations?
So I guess there's a few different kind of levels to this, and it depends on the capability and capacity of your institution. But the base level really here is to get educated, to get close to the trend and what is happening, to participate in relevant events so that you kind of understand this space. Nobody has a perfect understanding because it's a rapidly changing space, but at least the first step is kind of educate yourself and to get ready. The second step really, I think, is to start to participate in collaborative work in tokenization and digital assets. We're a big fan of collaborative innovation. We rarely do things on our own. Mostly we do things together with members of the Swift community. And so there's the opportunity for banks and financial institutions to get involved in those innovation projects. And there are also obviously many other projects out there. Yeah, it doesn't have to be a Swift project, but getting involved in collaborative innovation is definitely an important way to learn and also to be able to start to understand the implications of this trend for your own institution. And I think in this space, much like many other spaces, there's no substitute for getting kind of hands-on in terms of that kind of exploration so that you can really start to understand it. And then the third step, I think, is actually to create a specific digital assets or tokenization strategy for your institution and start to invest in capabilities, both business and technical capabilities, that will allow you to be able to take advantage of that opportunity for the future. So it's up to every institution, obviously, to determine their own strategy. That's not for me, it's Swift to advise on. But there's progressive ways that you and your institution can get closer to this important trend. And what we are saying to the industry is, look, this is a trend that is coming, that is accelerating, and the industry then needs to be able to get ready for.
Excellent. You touched on Swift projects there, but you launched some live digital asset trials this year. Can you tell us a bit more about what you're working on there?
Yes, we're very excited about these live trials. We announced them in October last year in the context of Cybos, and we said we would be into these live trials early in 2025. And I can tell you we are very actively into these trials. We're using the solution that I mentioned, this digital assets interoperability solution. And we're primarily working with members of the Swift community on three particular use cases at the moment. The first use case is around unlocking post-trade settlement of digital assets. So that also in the jargon of this space called delivery versus payment. So being able to synchronize the movement of a digital asset with the movement of digital money. We're quite advanced on that trial and looking forward to seeing the results of that. The second use case is around payment versus payment in the foreign exchange settlement space. And in particular, in that context, we're looking at currencies that today are not settled on CLS, so outside what is called the CLS 18. And we see growth in those currencies, and there is settlement risk when either both of those currencies or one leg of that currency is not on CLS. And so what we're aiming to do is to bring forward, working with a group of 6 leading financial institutions at the moment, a mechanism for synchronizing FX settlement. And then the third use case we're working on in these trials is a use case where we're looking at blockchain-based events and the ability then to trigger payment in existing fiat currency. So being able to use the existing payment methods to interact with blockchains. And we demonstrated a first result of this late last year in the context of Singapore's Project Guardian, where we worked with UBS Asset Management and Chainlink to show how a conditional issuance of a tokenized fund unit could happen on a blockchain. That then triggered a payment in fiat money through Swift. And then we were able to pass the confirmation back to the blockchain that enabled the release of those fund units to the investor. And whilst we envisage that in the medium term, there will be digital money available, we also think that at this point in the development of the trend, it's important to have the ability to trigger fiat payments as well. One thing to say about these three use cases is we don't see them as being standalone. We see them as being linked. And what we're trying to do through doing these live trials and use cases is really to be able to learn and then create standards and market practices about how the industry can do these transactions. And so there's a real important sort of almost like horizontal thread, if you like, to these three use cases about creating standards and market practices. As I said before, we're big fans of collaborative innovation, so we won't be doing this on our own. We're very much working with other bodies, standard setting bodies, other players who are involved in this part of the market to be able to create those patterns, those market practices, so that we can then contribute to the scaling of this evolving market space. So it's an exciting step we're taking. Whenever you go into from kind of innovation and experimentation into something that makes live movements of assets and money, you end up having almost a multiplication of the amount of effort involved, because all of those institutions need to engage not only the innovation teams, but a much wider set of teams across their institutions. But we do really think this is a valuable step to take. And as I said, we're looking forward to seeing the results.
Excellent. Yeah, sounds great. And I guess on the results front, what do you expect over the next year in terms of progress there? And are there any other similar digital assets initiatives you've got going on at the moment that you're excited about?
Yes, we're hoping to be able to complete all three of those live trials by the end of the year. That's an important step in learning for us, both in terms of being able to demonstrate that we can provide the interoperability, as well as to start to create those standards and market practices for the Swift community. So I think it's very much a kind of a step-by-step approach, but we're moving here at the speed of leading players in the market. And I think that's really important for Swift to do. We're also, as with this interoperability solution, also enabling institutions who don't want to open a node on every blockchain to actually be able to reach digital assets. And so that's also an important part of this work, is to enable institutions who want to continue to use existing Swift channels like messaging to be able to instruct on Swift and to reach digital asset or digital money networks. That's another important component of this initiative. Alongside that, there's a wider kind of digital thread of our innovation space, including other topics like digital trade, for example. And by trade, I mean physical trade in goods, supply chain types of transactions. So, for example, in that thread, we recently announced an innovation partnership with the European Central Bank, where we're bringing together a group of institutions in the trade ecosystem in order to look at how conditional payments, such as those provided by the digital euro, might actually be able to enhance the trade in physical goods. So how you can coordinate trade events with conditional payments. And so we'll very much continue to innovate in that way with the SWIFT community. I think this whole space, whether it's digital trade, digital assets, digital money, is just going to really evolve at a great pace this year.
It sounds like exciting times ahead, so it'll be great to hear how it all goes. But just to finish things off today, then, if you had one message for financial institutions, then what would it be?
Well, I guess if you allow me two messages, I suppose, but they're linked messages. So my first message is there is a trend happening here. So we as a financial community need to get ready for it. As SWIFT, we will play our role in that. And then the second message is very much that we are here to support the SWIFT and wider financial community, and we'll do that through collaborative innovation.
Thanks again, Nick, for chatting with us today. To close out the podcast, we have on our infamous FinTech Jail. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
So I'm going to bid for freeing up tokenisation from the FinTech Jail. And the reason I'm going to kind of make that bid is because, as I hope you've heard today, this is something that is not a buzzword, that is actually really happening. And it's a trend that I think we'll be seeing a lot more of as we go through the coming years, and will take us potentially to a world in which all of finance is tokenized. So I don't think we can dismiss it as a buzzword. I think we have to be on top of that trend and getting ready.
Excellent. You've touched on a few of the benefits of tokenization throughout our conversation today, but maybe just to finish up here, I mean, what would you say the next steps for tokenization then to really hit the mainstream, do you think?
As you've heard today, and I mentioned at the start, right, in principle, anything can be tokenized, anything can be represented in a token form. But actually, to create tokenization at scale, I think we need to avoid fragmentation coming in. And so that piece of interoperability, I think, is going to be really vital as we go forward. And with that, also, interoperability can have many forms. And so creating the standards and market practices that the financial community will be able to adopt, I think, will be absolutely vital.
Excellent. Well, yeah, I'm more than happy to remove tokenization from the jail this week. And like I said, excited to see what's next for the technology and how it continues to grow as the payment space evolves further. But for now, Nick, thank you so much again for joining us for the podcast today. It's been a pleasure.
It's been a real pleasure. Thanks for having me on.
Thanks. Well, that's all we have time for this week. Thanks, of course, to Nick for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest fintech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favourite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.